Think Realty Nation, it's your host, Abhi Golhar. I'm excited to be here today. We're talking about commercial real estate and, of course, a surprise little article that I found on the interwebs that I think you need to know a little bit about, specifically about the impact of nearby transit on office and multifamily. So if you're an office investor, multifamily investor, you want to pay attention to this little tidbit. But the star of the show, his name's Ben Beggs. We'll talk a little bit about commercial real estate technology, this kind of stuff that you need to know as an investor kind of going into this next year and why this matters. So we'll talk about his background, his achievements, and get into the nitty-gritty. But we can't do that without telling you the sponsor of today's show, which is Narada Real Estate Investments. My good friend Marco Santarelli and his team do an excellent job. Excellent job. So Marco, if you're watching and listening, I love you, man. So here's the info that you need about Narada. This podcast is brought to you by Narada Real Estate Investments, your premier source for cash flow investment property. Visit www.turnkeyrealestateinvestments.com. All right, on to the show. My good friend Ben Beggs, welcome.
Hi, Abhi. Thanks very much for having me. Really excited to be here.
Hey, I'm excited that you're excited to be here. Something like that. I think that works, right? That's good? That's good. All right, give us a little background. Who are you and what do you do?
Yeah, so I'm Vice President of redIQ, and redIQ is we're a software platform for real estate investors that's really focused on multifamily assets, stabilized and value-add multifamily assets, and the underwriting of those assets. So we take a lot of we have about 350 clients today. So we see quite a bit of volume, and what we do is we take the ugly work off of the underwriter's plate, no matter how you're valuing a property, by extracting data from static financial documents such as rent rolls, T12s, pro formas, cleansing that data and putting it into a standardized format so that it can be connected directly to underwriting models. Got
it. So in complete English, for those of us that are not multifamily investors or office investors, you said T12, you said a bunch of other stuff. Just like give me like treat me the way you would treat like a puppy golden retriever, right? Like I know nothing about a T12. Help me understand these basic terms, and we'll dive in.
So I mean, we're focused on multifamily, but it doesn't really matter what asset class you're looking at, whether it's office, a single-family home, a multifamily building. Whenever a deal starts, everybody asks the same question: how much is the property worth, right? The broker takes a look at it and tells the seller, I think I can sell it for this much, and here's why. And the buyer makes his own opinion of value, and then he takes that to his mortgage broker or banker, who has to make their opinion of value. And then the banker says, well, I need to get an appraisal. And so they get an appraiser, who then has to make their opinion of value. And everybody does this the same way, by looking at the income and expenses that the property is generating. And if it's in the case of multifamily properties, we need to know the tenancy and the history of tenancy in the building. So how many units are occupied, what rents are they commanding, if they're renovated units, are they getting a better rent? If so, how much? So that you come up with a story of the deal quickly, which could say like, hey, here's the upside that is available, right?
So with all this data, and so you're interested in buying a multifamily property, and you work with the seller, the broker, and you get all this information. You get the trailing 12 months of financial statements. You get the rent rolls. You have to make sure the rent rolls are actually like accounted for in the bank statements. So you get all that information. And that is, I mean, I've analyzed a fair share of multifamily deals in my day, and every time I look at these deals, Ben, like I sit down in my living room and I have like a circle of paper around me on the floor. And then I have like my computer pulled up, my wife's iPad pulled up. I've got all this data. I'm trying to look at comps. I'm trying to figure all this out. I'm on Zillow. I'm on, everywhere. On LoopNet trying to find comps. I'm on the phone with my broker. I've got 3 speakerphones going. And it's a mess. And then I end up losing like my head in figuring out this stuff and trying to make sense of of this deal. And I'm sure there's a quicker way to do it, and I'm sure that's what redIQ does, because you marry data, you marry technology, and I mean, you've like built the real estate version of Watson, haven't you? I think that's what's like under wraps here.
Uh, that might be a bit ambitious, but yeah, but we do have, one of the things that you mentioned about having that circle of papers around you on the floor for all those rent rolls, right?
Yeah.
Really the bread and butter of the application that has made us so popular is that you can simply drag and drop a large 80-page multi-line PDF rent roll onto my software, and it automatically extracts all the information, and it's going to then find errors and anomalies that are in that rent roll. So in every rent roll, there's going to be, the rent roll says the date is the first of this month, but you have leases that are marked as current with expiration dates in the past. You have leases with rents that are above or below what the listed market rent is too much. So we help you find all that, make all those adjustments. So you can either make your own assumptions, or you may need to call back the broker or the seller and say, hey, what's going on with these units? This doesn't make, please update it.
Yeah.
And the same thing for financial statements and expenses. And then we connect it all to, if you have, we sell an institutional grade underwriting model that's Excel based, which can be synced to directly from the cloud. Or if you have your own, you can also populate it directly from our online software. So it allows you to analyze many, many more deals in a short time than you could before. So, we'll have clients that have professional analysts, and they'll be able to have one analyst do the work of 5, because now they can turn over that many more stones. And it's that important when they need to understand this. And the next thing that we do is every time you look at a deal, it becomes a comp in our world, right? So while I don't provide comps from other investors who have uploaded, information you upload to our platform is yours, it's confidential. The most important data that you can have is first party data, right? You mentioned being, hey, you're on LoopNet, you're calling a broker. All of that is ultimately hearsay. But what do you trust when you pull the trigger on the deal? You trust what you've seen. You trust what you know of that market, right? And so if you want to know exactly what type of renovation premiums were commanded in another deal, that you need to look at another deal that you've looked at. If you want to know what the repair and maintenance trends are in that area, you need to have looked at a lot of financial statements and actually see how properties are being managed and what the market's doing. So we allow that to happen.
So it's a very interesting point that you bring up, because especially in this market right now, I mean, you've got to, it's not whether or not a deal makes sense. It's why is this deal not going to work?
Well,
right?
I mean, what we want to do, you want to become an expert in the deal as soon as possible, right?
Right.
That's what everybody wants, whether you're the buyer, the seller, the broker. Everybody wants to get past the knowledge learning part, the data copying part, the part where, okay, we're all talking about this deal. We all have an understanding of what the potential is here. We may have a difference of opinion about it, but at least we can get down to the assumptions, which is what is really, that's the art of doing real estate deals, right? And to do that, you got to take good notes, which means you need to remember everything you've done. And we live in a world where a lot of commercial real estate investment up until today has been vested in what I call, institutional knowledge has been vested in, age and experience, which is not always inaccurate, but when you go to investment committee, you need to back that up with some information. If you hire a new person to help you, you're going to want to plug them right into your process and your thinking and all of the acquired knowledge that you've had of deals that you've done. So redIQ is really powerful for that.
I like the speed to execution, right? Like that's really what would sell me on this, because if I'm looking at a deal, I sure as heck know that there are other brokers, there are other investors, multifamily groups, whether they're institutional or mom pop kind of shops, that are also looking at these deals. Yeah. And I need to make an assessment very quickly of whether or not this deal makes sense, what the challenges are of the deal, and get back to the broker and say, hey, this is what we can do, this is what we can't do outside of the capital that I'll need to raise for the deal anyway. And the broker will respect that. And they'll say, Abhi, you know what? Listen, great. You turned this information around for me. In 24 hours, you have a laundry list of things that I need to get clarification on from the seller and the broker on that side. Good job, right? Like, and here's why it works, here's why it doesn't work, et cetera. And the likelihood then of you getting additional deals from that broker is significantly higher than, if you're like me and you took a weekend to figure out if a deal makes sense and you lost sleep and you're in the corner twitching because you can't analyze a freaking property, right? Yeah. So redIQ pretty much addresses that pain point. Help me understand how much the overall cost is if I were to sign up on redIQ, what that means for me, what that means for my bottom line.
Yeah. So redIQ, we're an enterprise software, and we have clients that span the gamut, right? From individual investors all the way up to national brokerages who are using us wall to wall. So our volume today is really quite high. Like I said, over 350 clients. About 20% of the top 500 owners in the country are using redIQ today. We have 9 of the 10 top brokerage shops using us. So, and before I tell you about the prices, I would also mention that collaboration is what we're really trying to get to here, where you and your broker, if you're building a relationship with a broker, right? The broker not only wants to get to the story of the deal, they want to present you with deals that match what the type of story that you're looking for, the things that you do well. Perhaps you're going to bring management in-house, or you like deals where you can, do RUBS utility play, something like that, right? Well, they're going to be able to get that information quickly out of what that deal is and know, so that both of you are looking at the same source data, but through the lens that you like to see it through. So it's sort of like a translation. As far as the client sizes go, we're an annual platform. We don't charge by the number of users that can be on the platform because, much like a forklift, it doesn't matter how many drivers there are, it can lift enough for 1,000 people to stop, right? Like,
yeah,
how many users do you need to drag a file into a folder? One guy can drag a lot. So yeah, but I mean, our costs are, usually around, our small clients are paying around $1,000 a month, and then our national shops are paying, many times that.
Yeah, I mean, and that makes sense, right? Like, if I'm doing a tremendous number of deals, it's the time value that I'm getting back. And even for somebody that's smaller, if you're paying $12,000 a year to be on your platform, I mean, just imagine.
On a higher analyst, it's $140,000 a year is the median price of an analyst these days.
Yeah,
so
exactly.
After your overhead.
Exactly.
So it's quite expensive. And if you can get by with that, or you can get by with one analyst instead of 5, there's amazing savings there. Furthermore, if you're trying to expand into other markets, yeah, I mean, you're always going to get data from, you can have CoStar, you can get Axiometrics or Guardi Matrix. You can pay for all of that stuff. And that's going to give you aggregate. It's going to give you pretty good overall information. But as you infiltrate a new area, you actually need to go and build up your own first-party set of comps and information. And this is an amazing way to do that. So when people are trying to get comfortable with a market or understand what's happening in a market, this is really where they're going to go. Because at the end of the day, it's going to be tough to go to your investors and say, like, well, I put it into Yardi and it said that this was the average rent increase. They're going to say, show me some addresses and
like give me something that's right. Give me something that's local, that's real, that I can touch and feel, and I can understand.
Right.
Yes, exactly.
Yeah,
I mean, and if you're listening to this and you're a multifamily operator and you're looking for additional deals and you're just like, well, geez, I can't hire somebody to analyze all this stuff. Check out redIQ. I mean, it's not only worth your time, but it's also worth the time investment, the money investment that you're going to make. You're going to get that back in so many different ways. And let's be honest, if you are a multifamily operator and you're running around the country or running around the southeast trying to find deals anyway, I guarantee you your Starbucks budget's probably about $1,000 a month anyway. So just redo that. And here's what you do, right? Step number 1 is you go to Italy and get yourself an espresso machine and ship it over. That's going to cost you like a couple $100, but it's really good. Number 2, get redIQ. So one more thing, artificial intelligence has become like this really hot topic for some reason. Really, it's in a bunch of if-then statements and maybe a chatbot. Machine learning, however, is a totally different animal and a totally different beast. Are you guys using this, or do you have any future plans on building machine learning into redIQ to make it more seamless for investors and more seamless for shops to get additional data without deploying humans to analyze it and be number crunchers?
Yes, I mean, we already have some machine learning and machine intelligence employed in the platform. I mentioned about finding errors and anomalies in those documents, so that's something that we learn from information. The platform also learns from the different formats of the institutional rent rolls that come toward us. And when we talk about profit and loss statements or T12s, we learn from the way that you map those expenses to your chart of accounts, so that as you upload more and more information, you don't have to manually map things into your model. It starts to learn that you call trash utilities. for example. In the
Gotcha.
future, we also,
Okay.
since we tie directly to sophisticated underwriting models, loan spreading models, templates that brokers use to make broker opinion of values, et cetera, we get a lot of information on that. We have a lot of exciting stuff coming up in this area. I mean, we're processing well into the many hundreds of thousands of documents per year. So we have a very big data set. Today, I think we have 22% of all properties, 50 units or more, across our platform.
Wow. Okay.
Somebody uploads it to underwriter, evaluate it, appraise it, pitch a seller, whatever.
Yeah.
So we have a tremendous amount of data, and like our near-term vision, we're going to be introducing more high-level online screening capabilities and using all this data to help people suggest the underwriting assumptions that they might use for a property to begin with, using this machine intelligence. So I'm not saying that clearly this is ultimately a value. You need a human to decide what the final assumptions are, but we have enough data now that we can really help marry that and say, like, hey, here's where you should start.
And that's the power of machine learning, right? That's the power of AI. I'm not saying get rid of humans altogether. Believe me, I'm very pro-human. It'd be kind of weird if humans started dating robots. I haven't figured that out in my overall reality yet. But I do think that if we use software to empower decision making, that's exactly the use of what software should be. Just last question for you, and then I want to know your contact information. In your underwriting templates, we all know that if I'm looking at a property, or if I'm looking at T12s in a financial statement of an apartment complex, if I'm a seller, I can get very creative with the numbers and show that this is a financially well-performing, positive cash flow property, when in reality, it's not. And there could be many challenges with the property, but I'm hiding it, I'm lying with statistics, and I'm lying with numbers. Does your underwriting template spreadsheet kind of flag, geez, generally speaking, we're seeing this trash expense, which is 55% greater than average. There could be something that's going on here, or somebody's embezzling money somewhere. And then all of a sudden, this becomes a red flag then to go speak with the selling broker about. Is that part of the overall package?
Yeah, so in the financial statement, in the historical segment, it does highlight those outliers. So you can find in the trailing historicals where things are different. Also, on the revenue side, one of the things that we've seen a lot is that people we have some pretty good charts that show revenue versus occupancy, which is something that you really want to look at. It's common when large multifamily properties are entering the point where they're going to be in an acquisition disposition phase, that those could be manipulated. You'll allow concessions to evaporate, or so that vacancy looks a bit lower, but revenue looks a bit higher, such that you can artificially inflate. It's more common that we see people attempting to paint a rosier story of the upside than it is outright lie about the expenses. That you're going to get caught on that ultimately.
That's right, and that's where investors need the help, right? If you're a new real estate investor, you need that help because it's vastly different than the residential space. You can't lie in the residential space, right? But you can in the commercial space, and you need to make sure that you have the right information. And if you can use automation, you can use machine learning and redIQ to help you be smarter. There are two things that matter, right? You got to be smarter, and you have to execute quickly. And if you can do both of these things, then here's my money, right? Here's the $1,000 a month. So Ben, and
you got to turn over a lot of stones, right? So we are in a market today where it is a tight market. There's a lot of capital out there chasing deals, as you guys probably know. And so, if you were investing this way in large multifamily buildings, say, at the turn of the cycle in 2010, 11, you could look at 10 deals and find a lot that pencil. And now you're going to have to look at 50, 60, 100. So having tools to help you do that, you want to be cutting down trees with chainsaws, not axes.
Right, exactly. I mean, unless you're, massively good looking, like the both of us, then you don't have to look at so many deals, right? It's just just amazing deals land in your email on a regular basis, and
still have to underwrite them.
I'm just saying. Ben, thanks so much, man. I appreciate the time. What's the best way to get in touch with you if I'm interested in signing up for redIQ?
So certainly check out our website, rediq.com, and you can send an email directly to info@rediq.com. Someone will get back to you. My name is Ben Beggs. You can email me directly, bbeggs redIQ.com, and be happy to help you out, give you a demo, see if it's something that can really help accelerate your business.
Awesome. Sounds good. Ben, thanks so much for joining me, man. I appreciate it.
Thanks very much, Abhi.
You got it. Think Realty Nation, next up, we're talking about the impact of nearby transit on office and multifamily. And this segment, though, is brought to you by Real Property Management, which is the largest residential property management franchise in North America, managing tens of thousands of properties for individuals, investors, and institutions throughout the country. Learn more at realpropertymgt.com or call 888-806-7088. So there's a pretty cool article on National Real Estate Investor that everybody should look at, addressing the impact of nearby transit on office and multifamily property values. And what's kind of funny, so I live in Atlanta, and Atlanta's starting to now upgrade MARTA, which is our rail and bus system. And from a residential perspective, it's having a crazy positive impact, because now I can live a little outside the city, no big deal, and I can still get to, say, downtown or midtown or Buckhead lickety-split, which is really helpful, right? Which is good. From a office and multifamily perspective, quote, when it comes to location, precisely where should these investors be looking? A new report from the American Public Transportation Association and NAR suggests they should be looking at properties close to public transit, which is also kind of funny because a little while ago, we talked about this concept. We also talked about how much more value residential properties would be worth if they're near public transit, and it was a pretty significant amount. The researchers in these studies showed that in 7 metro areas that provided access to heavy rail, light rail, and commuter rail lines, I guess that's what they were looking at. And in these 7 regions, the report shows that between 2012 and 2016, residential properties within transit-oriented districts recorded median sales prices that were 4 percentage points to 24 percentage points higher than residential properties not benefiting from proximity to public transit. And I'm scrolling to see where the information is about the multifamily. When a spike in property values wasn't observed across the board, the report does signal that proximity to public transit should be a consideration when weighing into an office building or developing a multifamily project. I think this is kind of stating the obvious. So if you're looking at multifamily, not only look at redIQ and see whether or not the deal makes sense, but build in a premium if it's closer to public transit. So I'm all for it. Think Realty Nation, I need your help though. What do you think? Does this make sense, or does it not make any sense? Or maybe there's a riffraff concern if you're that close to public transit. I don't know, but I want to hear your thoughts. You want to get in touch, go to thinkrealty.com. You want to get in touch with me anywhere online on social. I'm spending a lot of my time on LinkedIn and Instagram lately. So definitely communicate with me there if you want to get some answers one-on-one. And you should also check out Nevada Real Estate Investments, which is the sponsor for today's show, your premier source for cash flow investment property. Again, you can reach them at www.turnkeyrealestateInvestments.com. So, Think Realty Nation, that's a wrap. It's been fun. I had a really good conversation with Ben from redIQ. And intelligence matters. BI, business intelligence matters. Being quick to deals and being the smartest one in the room, actually in this case matters. redIQ is where you gotta go. Get in touch. Until next time, happy investing.